This is Robert Harper with Virginia Farm Bureau's Grain Division. Glad to bring you the Merchandiser Minute today, Friday, June the 11th, 2021. At the end of a week where we've received a lot of much needed rainfall across Virginia, and the Northern Plains even has received a lot of much needed rainfall this week. Let's take a look at how the futures closed. And before we get into that, I would definitely comment that this week's trade was all about the weather, and we're getting used to this June, July, and August time frame where we're in a pure Northern Hemisphere, North American weather market. December corn up 18 cents for the week to close at 6.09. November beans up 3 cents for the week to close at 14.38. In July, wheat down 7 cents a bushel for the week to close at 6.80. We know that our ranges are very wide each day during the trading session, whether it's the night portion or the day. And let's take a look at some of these ranges. Your new crop corn had a 35-cent range this week. A new crop beans, a 55-cent a bushel range this week. And we also had a 35-cent range in the July Chicago wheat contract. So depending on what time of day you look at your quote screen, and if you look at your quote screen more than once a day, you can see some big variability. We had 3 days of trade this week where the direction reversed during the session, the day session, because of weather models and how the speculators interpret and trade those weather models. Just know, going through these next 90 days, this isn't going to go anywhere. This is the norm. We know these futures markets are highly sensitive to all types of influences, and weather is still at the top of the list. We want to think this week that one of the big influences was the USDA's crop report, WASDE report this week, yesterday. We also got numbers this week from Brazil out of an agency there called CONAB, a lot of data this week. And let's take a look at some things that we learned from the USDA as they revisited the balance sheet this month. First off, we would say that this report wasn't bearish to price per se. Most everything in the report, other than a little bit with corn, came in as expected by the trade. And I would just say that overall that it was not a bearish S&D report. We know that USDA is still working off the same yield expectations for corn and beans, 179.5 on corn, 50.8 bushels per acre on beans. That's the expected yield. We know we got the next 90 days to determine what that yield is going to be. But those are high trendline yield numbers. And we know that we've had extremes in the Northern Plains, we've had extremes in the Western Corn Belt, and a lot of chatter this week that it's going to be hard to hit those trends. We haven't killed the crop yet, obviously. We're in early to mid-June, but it's going to be hard to hit those high numbers. We'll just have to wait and see. The USDA this week lowered its Brazil corn production number. That was expected. USDA slightly raised Brazil's soybean production number, and they left Argentina unchanged on both corn and beans. And when we look to the U.S. and ending stocks, what we're going to have left in the bin on August 31st of this year, we did see a drop, more of a drop in corn than was expected. 1.1 billion bushels is the expected ending stock for this marketing year. That caught the trade, if anything, did a little bit by surprise. And same on the beans. We knew that USDA, or we didn't know, we thought that the USDA might raise the ending stock numbers some on beans, and they did. We were 120 million bushels of beans as leftovers in the May report. We were 135 million bushels of beans as ending stocks in the June report. So all within expectation. It seemed like the futures market traded the report for maybe an hour, and then it went straight back to weather. If we look at other USDA numbers this week, one thing impressive I thought to mention today about Virginia, adequate to surplus category on topsoil moisture. We came in this week, beginning of the week, at 64% adequate. If we went back 2 weeks ago, we were at 47%. If we went back 3 weeks ago in Virginia, topsoil moisture was rated 23% adequate to surplus And again, this week we came in at 64, and I know how much rain some of y'all have gotten this week. We'll see what they say on Monday. The U.S. corn crop dropped 4 percentage points, and its good to excellent rating to 72%. And we got our initial soybean crop conditions report on Monday. It came in at 67% good to excellent, and most analysts that I either read or listened to this week, or people I talked to, said that number came in a little bit below what they were expecting, but it was showing some of that frost damage that came as late as just 2 weeks ago. Export inspections, as expected for beans, the high end of as expected, if you can say it that way, for wheat, but we saw a sharp drop in the corn inspections for this week. Export sales, unimpressive, everything kind of just within expectation. One of the highlights this week, and we're going to watch this closely next week, we're seeing that gap between futures contracts in corn and beans narrow. Those spreads, some people say it is breaking. We're seeing those spreads break over the last 2 weeks. We're going to want to watch that next week. That tells us a lot about old crop and producer end user coverage. It tells us a lot about what speculators think on the new crop. So be watching that relationship between, say, July corn and September corn, or November soybeans, is how it would compare to the old crop July soybeans. And pausing right there for a minute, if you have any old crop bushels that are unpriced, give us a call Monday morning, and we want to talk about that. And we want to talk about the possibility of selling those old crop bushels off of the July futures before some of the buyers might roll out, the ones who haven't already. We got a wonderful, an interesting, I guess I should say, ethanol report this week that was a negative shock. We saw production go up, ethanol production for the week up 3.2%. That takes us to a 17-month high. Y'all have heard it here and seen it in your own study. We've been above, we've caught back up to pre-COVID production levels for ethanol now fully. And the stocks were up also this week, 1.9%. And I guess, as one person told me this week, you would expect to see production going up when ethanol margins have increased. A couple of other things in this space to talk about this week. We did see more information come out about the Keystone XL pipeline and it being discontinued. We also saw information about how the U.S. is going to relate to Iran and sanctions on oil. So keep your eye on that next week. And closing, next week is going to all be about the weather. We know that the USDA drought monitor is showing drought increasing in Iowa, South Dakota, North Dakota, and Minnesota. And we're going to be trading the weather models next week. And everybody's eyes are on June the 30th, stocks and acres report. This is Robert at Virginia Farm Bureau's Grain Division.